Hi guys, it's Ian and this is your weekly update video. It is Friday the 27th of June 2025, just coming up to 11 o'clock in the morning in the UK. We've seen calmer markets this week. This is obviously after the ceasefire agreement between Israel and Iran. We've seen an aggressive move back to the downside in US oil. A very large bearish outside day was posted. I think the reversal was over 10% in one day. We've since seen a period of consolidation. Volatility or continued volatility in DXY, which is the US dollar, saw another leg to the downside after Trump attacked Powell midweek, talked about replacing him with probably somebody that's a bit more friendly with regards to lower US interest rates. So fair bit going on. Obviously we've got PCE today, which is the core consumer consumption expenditure. It is a market moving data release. Could see volatility in US dollar products. We're going to run through those in today's video. Also quite interesting is the fact that we've got the US 30, the S&P 500 at or close to extension levels. Does that mean that we're going to see a higher reading than expected this afternoon for those US figures? Gold is moving to the downside. That has basically been pushed lower by a rise in stock indices this week. So instead of the people buying the safe haven product, they've actually been selling it, and that position has been unwound. We're going to talk about the good, the bad and the ugly. So we're going to talk about trade setups that have been productive and non-productive this week. Not particularly great week by any means. Like I said, volatility, we need volatility to trade, but also high volatility can cause a bit of an upheaval to anybody's trading system. So let's get to the charts. Just to highlight what we have here, this is a trading view setup. In the middle is the monthly chart, weekly chart, daily chart, 8 hour, 4 hour and then hourly. And basically that is the sequence that I like to trade in. So taking the sort of dominating trend from higher time frames and then moving down into lower time frames to initiate trades basically. On the right hand side of here we've got various watch lists. We've also got something that I've developed myself, which is actually single currency baskets. So DXY is obviously the dollar index, but we have little in the way. Japanese basket is already made up for you as well, but these others are overlays of 7 different currency crosses. So the euro basket is obviously euro Swiss, euro dollar, euro yen, euro CAD, euro New Zealand, etc., overlaid on top of each other and unweighted. And I like to use those single currency charts to get a bias for a single currency. So in other words, if I'm looking at buying the euro against the US dollar, I want the single currency euro to be positive or bullish, and I want the dollar or the DXY to be negative to give me correlation. So I use correlation quite a lot. So correlation is basically things moving in conjunction with each other. So i.e. what we've just talked about there, you know, if the dollar is moving to the downside, then obviously I want euro against the US dollar to be moving higher. But we can also use correlation for risk on, risk off. So when we see a potential topping formation in the US 30, which we're going to talk about today, then that can cause a move higher in safe haven. So a move higher in the Japanese yen, the Swiss franc. It was quite strange actually this week because I've got two risk on, risk off products they're actually moving in the opposite direction. This has been happening quite a lot lately, especially with yen products. So I've actually got Aussie yen, which I'm long of at the moment. It's in an expanding wedge pattern, expecting it to break to the downside eventually. Luckily enough, being able to get some of the profit off on that trade setup already. But then we've got US 30, which has hit a 261.8% extension. Got to remember, US indices are now near or at all-time highs. Not the best time to try and sell into that, but there are warning signs that we could see potential topping formations. So we'll start off with the US dollar crosses. We'll talk about Bitcoin a little bit. I think dollar CAD is quite interesting for people that do like to try and pick a base in a currency pair. We'll also talk about gold, where I believe that's going over the short and medium term, and we'll look at the FX majors as well. So big picture analysis. We've talked about this. Is the weekly chart. It keeps on driving lower. Okay, this is being driven definitely by news this week. Obviously, as I said previously, about Trump and Powell. Can we get anything out of this chart? Now, before I was talking about a 5-wave completion, so wave 1, wave 2, wave 3, wave 4, and then down here in 5. What we have discussed before is the fact that Elliott wave is very subjective. What does that mean? It's in the eye of the reader or the trader or the analyst. Okay, if you go onto some specific Elliott wave platforms or analytical platforms, you'll notice that the wave patterns changed a lot. So what might be an ABC correction becomes an ABCD EF correction, or WXYZ, etc. So it's very, very subjective. What we could potentially have here, and like I said, it's subjective, 1, 2, 3, 4, and this could be a 5th wave extension. What do I like to see, or what happens most of the time when we get a reversal formation in Elliott wave? We get, firstly, an ending wedge pattern. And then secondly, we get a head and shoulders reversal. So a head and shoulders reversal is normally the start of that move back to the upside. So this weekly chart, what we do have is we've got a trend of lower highs. Okay, but what we don't have is a confirmed trend of lower lows yet. So is this the swing low? Does that make up the wedge formation? Well, we're not really going to know until we at least see a higher low. Okay, so we know what the measured move target is going to be, because it's going to be here, which is 101. Let me just put that in. 101.54. Okay, but at the moment, yes, there is a potential to move to the upside. There's always a potential to move in either direction. It's trying to formulate a plan that's the most important thing, but it has the potential to move to the upside. We know where the measured move target is. We know that where the previous swing low is, so what was support then becomes resistance. We know where trendline resistance is, so we can start sort of building a little bit of a plan. However, let's just take this back to a shorter time frame. 240. Okay, so potential ending wedge pattern, but we have lower lows and lower highs. We haven't broken that formation yet. If we look at a fib extension tool, we place that on the chart, nothing really lines up. Okay, we've got a 261.8% extension level here, which is actually one of my bespoke resistance levels. This is actually a weekly resistance. But what should we still be doing? Well, according to this and according to Elliott wave, even if we get a move to the upside, we should be selling into this wave 1 rally, and that resistance level is located around about 97.77 today. So and that will actually flow into next week as well. So although the medium-term bias could be skewed to the downside, unless you're really looking at sort of picking bottoms, and it's very, very difficult to do that because it's difficult to know where you put your stop loss. Okay, so if I buy it now, do I put my stop loss under the swing low? Do I put it underneath a projected fib level? Do I put it underneath a trendline support level? At least when you start to build a wave pattern, and we talked about this in a previous blog, if you trade wave 2, or what you believe to be wave 2, then you've immediately set a stop loss, okay, because you're trading a wave pattern, and if it blows below the previous swing low, then that wave pattern is just negated. So at least you can then formulate a trade plan. Okay, you can formulate your R rate, and potentially your R rate, if you bought into wave 2, could be anywhere from between sort of 3 to 1. Sometimes you get them if they pull all the way back near a swing low, and sometimes you could see inside cipher patterns there. Then sometimes you can get some very good risk reward. So that's the dollar, and obviously we're going into PCE this afternoon. We're still making lower lows and lower highs, so the bias is still to sell into rallies. Reflecting that on to and there are warning signs, so reflecting that onto the euro against the US dollar, we're trading at multi-month highs, or at least did yesterday on my wife's birthday, which was the 26th of June. We've got a 261.8% extension level here, but we continue to make higher highs and higher lows. So really we want to be buying into dips. If this trend reverses, and we want to see a 5-wave pattern to the downside, sorry. So normally when Elliott wave formations reverse, you will get 5 up immediately followed by 5 down, and that is a good topping formation. And what will normally happen, and nothing happens all the time, and that's the trouble with technical analysis. Okay, what will normally happen is you'll get a head, which is your peak. You'll get a left shoulder, okay, and then you'll get a right shoulder, which will form your topping pattern, okay, and that will then give you a head and shoulders pattern. Why are these formations important? Well, they're important to me because they give you good entries, and even more importantly, up in this sort of zone, they give you dedicated target levels. So a wedge formation, the target level, well, the wedge formation normally works around about 60 to 70% of the time. So if you do nothing else but hunt wedge formations, then you should by all means be profitable. But what I do like about the head and shoulders formation, the wedge formation, is they give a measured move target. So you basically take the head to the neckline, project it from the neckline. That then gives, and of course these aren't real figures at the moment, that then gives you your measured move target. And then if you execute a short trade and going back to risk reward, you know, you can then work out your R rate. So at the moment, of course, going into the figures this afternoon, mild bearish bias just on the back of the 5th wave extension. However, support is located at 1.1565. So my preferred stance, just on a wave pattern analysis, would be to buy into dips at the moment. Dollar CAD, I want to talk about this because I think this is quite unique when we're talking about, you know, what I call them bottom feeders, so people trying to find the base of a trend and the start of a new upward bias. Here is dollar CAD monthly, okay, 1, 2, 3, 4, 5. So completed a fifth wave. A common place for the first A leg, so A, B, C, is in the confluence zone from the third and fourth leg. So you can see a lot of price action going in here. This moves lower, soaks up liquidity, gets stuck a bit, moves to the upside. What we do have on this time frame, this is the daily time frame, is wave 1, wave 2, 3, 4, down in 5, a wedge breakout. So we talked before, or I talked before, about the fact that fifth waves often finish with a wedge pattern, or they finished with a reverse head and shoulders. This looks to be finished with a wedge pattern. What is common for wedge formations and channel breakouts is that you get a retest of the trend line, not necessarily the level it broke out. So it broke out higher, it comes back and retests, and that can often be wave 2. Okay, and then we sort of push to the upside. The measured move target 144.15 for the wedge, so it's a long way up. Obviously this is a daily chart. I've got intraday resistance located between 1.3689 and 1.3703, so I really need to see a break of that to continue this trend to the upside. Bitcoin, been asked a lot about Bitcoin this week, because obviously we've seen quite a decent move off these sort of swing lows around about 98,000. Again, Elliott wave, wave 1, wave 2, wave 3, wave 4. Somebody asked me to write a trade plan for Bitcoin this morning, and actually said they wouldn't hold me to it, but if I was to trade Bitcoin, what would I do at the moment? And I said, well, this is a weekly resistance zone around about 109,000, 109,780. This looks like a Wyckoff distribution zone. So basically the theory says that you get these periods of consolidation, often with inside days posted. What happens then is that smart money are accumulating short positions in this zone. They spike to the upside, that takes out weak stop losses, and then they reverse the trend, and that will often happen near a 261.8% extension level, and that is located at 109,780. I don't see support till all the way down here, which is 99654. So again, a spike higher could mean a spike lower in the dollar, but again, Bitcoin has a tendency to move with risk on, risk off, and it sort of has its own rhythm, if you like. So that would be my bias, and purely from a risk reward perspective, you know, if you had to, if it was a gun to the head challenge, which we used to do in Talking Bull, you know, you've got to be looking at R rates purely, and the R rate for sort of selling into that resistance zone comes in at about 5.5. So we said that we'd talk about gold. Right, gold, everybody's favourite. Very difficult product to trade. Doesn't always do what you expect it to do, want it to do. We've got a wedge breakout. The measured move target's all the way down here. Let's just move it in, which is going to be $3,120. Got a support level here at $3,235. Got a bat formation completing at $3,158. So everything to the downside sounds negative, but plus we retested the breakout level. So like I was saying previously, a lot of the time, like dollar CAD, we break out of these wedge formations, we do have a nice clean retest, and then it moves to the downside. What's happening at the moment? Well, gold is moving mildly higher. There's a resistance level at 3343. So again, I was saying you've got to look at correlated products. US 30 has hit a 261.8% fib, which we'll talk about in a sec. If stocks come lower, then obviously gold has room to correct higher. This could be just a correction. Okay, so 3343. Again, talking about just flipping back because my mind doesn't wander, but it grabs different things that I want to talk about. Where is the risk reward trade? Okay, where do you put your stop loss? This is the most important part of trading and really systematic trading and analysis. Sort of, you know, I get asked a lot, what is gold? Well, I'm bearish, but I'm not bearish from here because I don't see value. Okay, there's got to be value in the trade. If I sold it here, I've got a risk reward factor of 1.63. All that's going to happen is if it starts to move higher, you're just going to keep on moving your stop loss because you haven't really got a dedicated swing high, etc, etc, etc. So you want to get levels where A, your risk reward is far better, and B, you've got a confluence zone where it's more likely to stick, and then you can find another confluence zone where you can place your stop loss. So looking over here, you know, this level is so pivotal. Okay, 3,343 dollars has been pivotal. Got there in the end, and you can see that. So this is quite a good area to sort of set a short. What do you want to be looking for? You want to be looking for minimum of 3-to-1 risk reward. If I placed it above the previous swing high, I'm getting a risk reward factor of 3.25. That's not bad for a swing trade. Okay, so like I said, don't just execute trades because you think it's going lower. You've got to work out where your optimal entry is, your optimal stop, and your optimal target, and that gives you much better risk reward. So we said we'd look at US 30. We'll do that first. Okay, so trading around multiple highs. We've got a 261.8% extension level located at 43,567. We've got support located at 42,763. What could happen? Well, we could correct to the downside. But there is no topping formation at the moment. Okay, this is a very high risk setup just to sell into highs or sell into lows. We continue to have higher highs and higher lows, and that dictates that really from a systematic standpoint you should be buying dips until, as we said previously, until we get this potential flip in sentiment and then perhaps a head and shoulders formation, etc, etc, etc. So at the moment the bias is still to buy into dips, but a move lower in US 30 could bolster gold this afternoon, and we could see a potential correction to the upside. So just to highlight what I have on this right hand side here is dark blue means that I've executed a long trade. Light blue means it was on the watch list. Light red again is on the watch list, and that should be light red, and I'll talk about that gas because a lot of people are trading that at the moment, and again on the watch list, etc. When we see a green tab, that basically means that it was a profitable trade. It was executed and it hit its target. So as I was saying, I think I said earlier that I've got conflicting views at the moment. I've got US 30 that says there's a potential to be topping out, but I've also got Aussie yen that tells me that I should be continuing this trade higher, and I triggered here yesterday. So basically, again, accumulation. So accumulation and distribution. This is a distribution zone as far as the Wyckoff theory is concerned. It's got inside days. What is it also got? Well, it's also got an expanding wedge pattern. There's plenty of room to move in either direction at the moment. We could even say, you know, Wyckoff is probably quite similar to other chart formations in the fact this could be just consolidation and a potential flag pattern. Managed to get in at my support level, which was around about 94.06, and took some profit off near this sort of flag high. We are seeing a move to the downside. What I don't like is when I get conflicting views. So obviously we've got US 30 telling me there's a potential top in place. Aussie yen is a risk on risk off product, so it moves to the upside when we see risk on, moves to the downside when we see risk off, and we are seeing a bit of profit taking this morning, but at the moment the bias is still bullish. So correlation is not particularly great at the moment. Silver, big picture analysis. Let's go to here. I thought this was going to be ugly, but it might not be. Big picture 8-hour chart, 5 waves up, consolidation, okay, flag formation, and then rally to the upside again. Another 5 waves up, 1, 2, 3, 4, 5. So probably completing a medium-term cycle. What is the long-term trend? Well, the long-term trend, excuse me, is still to the upside. Am I sort of trying to pick a counter trend trade on a short-term basis? Well, basically I've got a confluence zone today. So previous swing low, I had a support level at 36.01, a previous swing low at 36.04. So when these levels combine, they add to the weight. What I thought that we were going to do was just move mildly higher, mildly lower, clip this support level, and then move up to a potential bat formation. What I do like to target is levels just below previous swing highs, because I believe that is often where smart money looks to get out of long trades. If you look at cipher pattern analysis, a lot of wave completions, or a lot of corrective wave completions, the AB legs and the BC legs, they will often finish either at 34.1 or 88.6% of the last decline. So I always think that, you know, instead of trying to take profit above a swing high, it's also worth trying to take profit below a swing high. Got very close to my stop loss, which was at 35.75, but we are starting to see a move to the upside again now. And again, buying silver, buying gold, it should really mean that we do get a move slightly lower in the US 30. Going into next week, or going into Monday, Euro New Zealand looks quite interesting, just on a sort of short-term basis. This looks like an accumulation zone, again inside days, just highlighting indecision. I've got a support level or zone on Monday at 192.02 and 191.90. If we get a dip lower, if you remember in the Wednesday video, I talked about really wanting to buy lower dips in the euro. This is the only one that's really looks even likely to play out. 192.02, 191.90 is the support zone on Monday. So just to highlight what we talked about in today's video, obviously going into PCE, chance of some volatility this afternoon. Big picture in DXY is mixed as far as I'm concerned, but still selling into rallies at the moment. Seeing a correction, or expecting a correction in gold, silver, but they again could be quite short-lived, and the focus for me anyway, this afternoon is going to be on US 30, and whether or not we see that risk on or risk off. Okay guys, that's it from me for this week. Have a great weekend, and I'll be back again next week with more analysis. Many thanks.
Hola Prime, trade with transparency.